Today's question, do you know the different forms of joint ownership? Throughout our lives, we all own assets jointly, bank accounts, real estate, and otherwise, sometimes with spouses, sometimes with other family members, and sometimes with outside investors. Joint tenants with rights of survivorship is probably the most common that we're all familiar with. And what it really means is that each tenant owns, or each owner owns, an undivided interest in property. But at death, that share passes automatically to the surviving joint tenant by operation of law. That's important because it doesn't matter what your will or a trust might say. Joint titling with rights of survivorship is often advantageous because it avoids probate. But sometimes people get caught up not coordinating their titling of assets with the wills and trust documents prepared by other advisors that might attempt to pass assets in some other form for personal or tax reasons. Joint with rights of survivorship differs from tenants in common because although each still owns an undivided interest, each individual can pass that interest to whomever they choose through a will or trust document or during lifetime. And with joint tenants in common, the interests of each party don't have to be equal. And finally, you might come across joint tenants by the entirety, which typically applies to real estate and only applies to married couples. It's very similar to joint with the rights of survivorship, with the key difference being that one tenant cannot transfer their interest without the consent of the other. Laws will vary from state to state, and of course, so will your circumstances. But being familiar with the terms should help you when you're understanding the distribution of your assets. If you have any questions, please contact us. This has been another episode of Do You Know with David. I hope you enjoyed it, and I hope you come back and join us again.